Markets are in a tumultuous place after President Trump announced really widespread tariffs on much of the world the other day. And let's talk about what that means for you. So when stocks go down, when bonds go down, when there's tumult and chaos in the market, it's very normal to feel scared or nervous or wonder what this means for you. So the first thing I'll say is, feel your feelings. I'm not going to try to say your feelings are misplaced or not valid. You should feel how you feel and note that and think about it. And I certainly don't want to minimize the fears you're feeling right now, but I do want to share some opportunities that I think are arising in a world where stocks are tumultuous or stocks are going down. Number one is you get a much better sense of what your tolerance for risk is. I'm a financial planner, and when a client begins working with me, I'll give them a questionnaire that asks them certain questions about their attitude toward investments and risk and chance. And those questionnaires are useful as far as they go, but there's one real way of understanding your risk tolerance, which is live through a period just like this. This is when you know your risk tolerance. And so when I say, feel how you feel and note those feelings, that's not just, pseudotherapy advice from a non-therapist. It is that, but it's also, a call to say, okay, what are you concerned about and where do your thoughts go? If you're concerned about, if your attitude is, okay, this is kind of weird, but I'm going to write it out. I think stocks will go up. I think my investments will kind of go up over time. So I'm gonna stay the course. That's good to know. If you're kind of unaware of all this, that's good to know as well. But if you're feeling a lot of tension, a lot of stress, and you're just wondering, hey, am I invested in a way that really matches my goals, my risk tolerance? Or if you're thinking like, wow, I really wish I had much less volatility in my, in my investments, that's good to know. Doesn't mean you should right away make some big change. Not necessarily, but it's good information. And so I think that if you do work with a financial planner or advisor, let them know. Let them know that, hey, I'm worried, and don't let them dismiss you. Don't let them brush you off. I think that a real conversation about this should involve some consideration of, hey, is it worth making my investments overall less aggressive, less risky? Now that could mean lower returns in the long term. That could mean you have to save more for your goals or spend less on them. But the quote unquote optimal portfolio for your timeline is not optimal for you if it keeps you up at night. So be aware of your emotions, be aware of your feelings, and think about what implication that might have for how you want to invest going forward and what kind of things you want to use along those lines. Number two is that, with stocks down, there are some opportunities here. So if you're somebody who has a lot of concentration, a lot of your money in a single stock, maybe the stock of your employer, for example, and you've been meaning to sell it, but you're worried about all the gains that you would have realized on doing so, well, I would check on that again because those gains might not be so significant. They might be losses now. You might have a situation now where you can do something you'd want to do anyway, sell stock that was really highly concentrated in your portfolio that you didn't want to get rid of because of the tax implications. Those tax implications might not be as severe now. Or you might be realizing a loss instead of a gain. Now, am I saying like you should, broadly speaking, sell your investments? No, I'm not saying that in a broad sense. What I'm saying is that if your plan was already to sell some shares of stock in which you had more money than maybe you should, the tax consequences of doing that might not be nearly as severe as they were a few days ago. So that could be an opportunity as well. And beyond that, if you are someone who has a lot of cash, you're sitting on a lot of cash right now, let's say you have so much cash, it's even more than you would need for a fully funded emergency fund. And that extra cash was money you'd planned on investing at some point. Well, here's what we know. The share prices for a lot of U.S. companies and a lot of, even bond funds are a lot lower than they were a couple days ago. Now, let me be careful with that because am I promising you, am I promising you that prices will go back up? No, and no one can really guarantee you that. No one can promise you that. But if your broad, kind of outlook on all this is that generally speaking, the companies that comprise the US economy and international economies will get through this, find a way to make money, or at least somebody else will, and keep making profits, and investors will regain confidence in them. Like if you think that your investments will go up over time, then it's worth noting that the things you were going to invest in are probably a lot less expensive than they were a few days ago. So if that was your plan anyway, if your plan anyway was to invest this extra cash, you can now buy a lot of shares at a lower price than you could before. And notice how I said, if you believe that your investments will go up over time, if you believe that stock shares of the things you were looking to buy will go up over time. If you don't think that, then it's time to really revisit your investment approach. And again, I'm a financial planner. There are a lot of great financial planners out there who can talk to you about this stuff, and really get a sense of what your goals are. I mean, you know what your goals are, but that you can get a sense of kind of what moves to make in service of your goals, how to really translate that into a financial plan, financial moves that would be appropriate for you. Now is a great time to look into that. That's a self-serving thing to say, I realize, but so it goes. So, I think number one is feel your feelings and just note what you're kind of worried about and the ways in which those feelings influence your thoughts and your investments. Number two is if there was stock you already wanted to sell, but you were wary of doing so because of all the gains embedded in that stock, well, there could be some opportunities for that now. If you were going to invest some cash anyway, but you hadn't gotten around to it yet, again, there's a very good chance that right now, as of noon Eastern time, April 4th, the prices of the shares we're going to buy are a lot lower than they were a couple days ago. So that could be a chance to do it. I'm not giving you investment advice because I don't know you. I don't know your situation. I don't know your deal. But what I am saying is, hey, in a very general sense, there could be some opportunities here. Let's the markets are in tumults. The political world is in tumult in a lot of ways right now, certainly in the U.S. And President Trump has said his belief is that these tariffs will, in spite of short-term, what he describes as maybe short-term pain, will lead to a better economy for the U.S. Is he right? I don't know. A lot of news stories you hear, will say, well, top economists say that won't work. That'll be short-term pain and really no long-term gain. One thing that President Trump and economists and me and you and reporters and big investors all have in common is we don't know what's going to happen. We just really don't know. And so I think now is a good time to take stock, no pun intended, of your investments, how they make you feel right now. Now is a very good chance to reassess your risk tolerance and kind of what it really is. So keep that in mind. And then, if there are moves you want to make, I strongly recommend consulting a financial planner, a financial advisor to really get a second set of eyes on this and think about what the implications are of making a change. That's always a smart thing to do, to get that second set of eyes on these things. But that's what it is. I think finally what I would say is, if your concerns really go to the heart of your own financial future, broadly speaking, that's normal too. There's been talk of a recession. Will there be one? Maybe. We don't know. Will stocks go back up? I expect they will, but I can't guarantee it. And even though I expect they will, I don't know when. So there's that. And I think that, it's good to take some notes. And so I would recommend writing down what you're worried about, journaling. And I think that, if your concern is that you're going to lose your job or there'll be a recession, it'll be hard to get a new job, that could point to some financial moves you want to make while you still can, building up a cash cushion. Very boring advice, I realize, but there it is. And I think that if you're worried about whether your stocks, your investments will kind of carry you through to retirement, maybe you're pretty near retirement, it's a good time to think, hey, does my allocation, does my investment approach really match my timeline and my risk tolerance? It's good to ask that question. The point is that, it's really tough to live with these concerns and live with these worries and let them kind of rattle around in your mind. They're real, they're valid, but if you can write them down, that might, number one, give you a small dose of catharsis in the moment. And number two, give you a sense of what kind of moves you might look to make in the coming days and weeks and months to assuage some of those fears, to prepare for whatever you're afraid of, at a time when you might be able to find calm that way and find some solace and something of a way forward, even in tumultuous times. So, hey, it's a scary time. A lot of folks are nervous. I'm nervous. I'm scared a little bit. I think that's very normal. I think your emotions are valid. You should feel how you feel, and then think about what to do about those feelings and what to do next. Let me know if I can help, and let's ride this wave together. Take care.